Yeah, there's going to be no change to that. Remember, this was a cornerstone policy as part of the Aramco IPO that the $75 billion dividend would be kept in place for 5 years. Now, clearly, the issue is that with the capex cuts that Aramco have announced, the operating cash flow is still not going to be enough to cover that capex plus the $75 billion dividend. So Aramco is going to have to borrow to pay that dividend, and you'll see the balance sheet lever up. Now, the positive for Aramco is that they don't have any debt on the balance sheet at the moment. But as the time goes on and we continue at these sort of prices, they are going to have to lever up the balance sheet to pay that dividend. But for the time being, there's going to be no change in this dividend policy, which is, as I said, is absolutely key for shareholders in Aramco.
Neil, what about future investment plans at Saudi Aramco? You mentioned we might see an adjustment in capex. What does that mean for the company moving forward?
Well, clearly, we've had an announcement as part of the OPEC Plus deal that Saudi is going to cut production. You remember that they pushed production up to 13 million barrels a day, close to 100% operating capacity. They've taken that down as part of the OPEC Plus deal to 8.5 million barrels. And of course, today we've seen it announced that they'll cut production further in June to around 7.5 million barrels a day. So, significant cutbacks in production. Clearly, that means in terms of upstream spending, there's less pressure in terms of developing new assets, new fields that was going to drive that production capacity higher. I think on the downstream side, clearly they're going to go ahead with the Sabic acquisition this year. But then I think, there's questions around, future discretionary spending, particularly in downstream. And I think one of the big questions will be the Reliance deal next year, whether or not that goes through if prices stay low.
I wanted to ask you about that Sabic acquisition as well. Reports surfacing just in the past few days that Saudi Aramco is now looking to renegotiate that deal after a 40% slide in Sabic's value. What's your take on what that renegotiation could look like, and is this mission critical for Saudi Aramco right now?
Well, I think, strategically, Aramco wants to build a gross refining capacity up to 10 million barrels a day to cover the growth that they see in their crude production. Also, if you look at future demand for oil, a lot of this is going to come from petrochemicals. And so they do see, the growth in refining capacity plus greater integration with petrochemicals to extract as much value across the value chain is absolutely critical to what they're doing. The problem is that, this acquisition comes at a time where we're seeing, a lot of stress within downstream companies. Refining margins obviously very low, very weak chemical margins, given the global weakness in the economy. So, the value in terms of what they're paying for Sabic, is clearly reflective of, valuations last year rather than where valuations now. I would have thought it's difficult to renegotiate a deal, given that this has been such a long time in the works, and we're going to see the completion of the deal this year. So I'd be surprised if the numbers change substantially at this point, but we'll have to wait and see.